Good evening, students. Welcome to the session. So today, this is TDS, TCS, right, and advanced tax. So how are we going to deal with this chapter? We are going to quickly revise also, and we will look around the few questions as well on these areas so that it will help you understand the nuances of the TDS, TCS chapter. Okay. In case you have any questions, please feel free to ask me any point of time. Now, as far as this chapter goes, or this particular topic is, what kind of questions are we expecting in examination? So, A, you can have the case scenario based question, right? That is one way to look at it. Secondly, you can also have the questions based on the some case law is asked. There could be MCQ type questions which can be asked students. So that kind of questions may be there, right, in this particular topic. So we will be solving many such questions. We will look at different examples in relation to this, right? And at the same time, you will be only able to answer these kind of questions only when students you have the thorough knowledge of TDS and TCS. Like it can also be asked as a kind of, the whole question in which there could be one point in relation to this. Now, only when you will be able to know, only when you will be knowing about this particular topic, only then you will be able to answer. So, this is a very important topic. Don't take it very lightly, and students, tend to make mistakes in these kind of questions only. Okay. So, let us start with it. The first is the TDS, right? Now, TDS is a kind of the mode of payment of tax only, right? It's a kind of the advanced tax only, wherein the instead of the government asking you to pay the tax on your income, the section 191 provides that the payer can collect or deduct the tax and pay it to the government. Are we clear? So in this particular case, you are not paying the tax, but the payer is collecting or deducting and paying it to the government. Are we clear? Now, the 192 onwards, still you have your 194 LCMO, whatever six sections are S, right? This is what contains the different provisions of TDS on different kinds of the taxpayer. So first we'll start with section 192. 192 is applicable to both resident as well as non-resident. Remember that. The payer can be a resident, the payer can be a non-resident. Even the payee can be a resident as well as non-resident. So means the employer can be a resident employer or non-resident. Even the employee can be resident or non-resident. In both the cases, 192 will be applicable. You will not go under 195. Right? What is the tax rate under 192? What is the rate of TDS under 192? Yes. What is the tax rate? Average rate of tax? Yes, Smriti, correct. Which will be dependent on the slab rates, right? So you will identify the slab rate. Now, whether we go for as per 115 BAC or whether you go as per the old regime. Yes. How do you decide the tax of the employee? Yes, students. How do we decide? It's a revision class. See, I'm not going to tell you each and everything. I'm expecting you to answer. How do you decide the tax rate? Yes, students. How do we decide the tax rate? Very quickly. You are an employer. So how would you decide that what is the tax rate which is applicable to the particular employer or a particular employee? Yes. You'll not be able to give me the answer. It's a very simple question. You are the employer, you are required to deduct TDS on the salary of the employee. So, how would you know what is his tax slab? Whether he goes for 115 BAC, whether he goes for the old regime, how would you know that? Default regime, yes, is 115 BAC. Now, if the employee wants to go for the old regime, yes, Samyathan, old regime, if they want to go, then only they have to give the declaration. Are we clear? So, the total income will be computed otherwise at the rates as provided under 115 BAC. Then, in case the employee wants to go as per the old regime, he has to opt out by filing a declaration with the employer. Are we clear? So the employer has to seek the information at the start of the year from each of the employees regarding their intended tax regime. And the employee shall intimate to the deductor. If he doesn't do it at the start of the year, the default tax regime will be 115 BAC. So if he doesn't intimate, it shall be presumed that the employee is opting for the default tax regime. Are we clear? Secondly, the employee also has to intimate if he has any other income besides this, so that the employer can take that into consideration. Are we clear? The employee also has to give the proof for claiming the HRA, ATC, ATD, all these deductions. Are we clear? So this is what the employer needs to do at the start of the year itself. So if he is employed, if he has changed the basically employment, if he was employed with more than one employer during the year, so in that case, he has to give that information. Yes. So that is how the employer would be able to consider the income which is chargeable under any other head, deduct the TDS, and consider if in case he has the interest on house property, he can set off against the salary, right? If he has the ATC, ATD, whatever the Chapter 6A deductions are, he can consider that as well. So that information the employee needs to give. Clear? Now, coming to the TDS over here, as I said, the TDS will be then deducted as per the slab rate. Whatever the employee has declared, basis the regime, the TDS will get deducted as per that particular slab rate. Clear? So this is about the section 192 of the income tax, which provides that in case any person is there, whether he is a resident or whether he is a non-resident, in all the cases, the TDS will be deducted under the 192. You will not go under 195 if he is a resident or if he is a non-resident. You will still come under the 192 only. And basis the amount net of TDS you will pay to the employer. Yes, are we clear about this? In case the employee wants, he can obtain a lower deduction certificate if he feels that the TDS should not be deducted at the higher rate. He can obtain the lower deduction certificate from the assessing officer. Clear? And the employer who deducts the TDS has to issue the Form 16 to the employee. Has to issue the Form 16 to the employee after making the payment of the TDS to the government. Clear? Any questions with respect to this? Yes or no? Are we clear about this, students? This is very simple. Now tell me one thing. There is something called as the higher rate of TDS for non-filers of income tax return. Let me show you that. This higher rate of TDS applies when the payee is a non-filer of income tax return. So, who is a specified person here? A person who has not furnished the return of income for the assessment year relevant to the previous year immediately preceding the financial year in which the tax is required to be deducted. So, basically for the last year. And for whom the time limit for furnishing the return has expired. And the TDS deducted and TCS in his case is more than 50,000 in the said previous year. So basically, he has not filed the income tax return of the last year and his TDS and TCS is more than 50,000. In that particular case, the payer has to deduct the TDS at a higher rate of twice the rate which is prescribed under the Act, twice the rates in force, or at 5%, whichever is higher of the three. Now, this section 206AB is not applicable to section 192. So, even in case where the employee has not filed the income tax return of the last year, still the TDS under 206AB or section 206AB will not be applicable. Clear? Yes? Now, another important point with respect to salary. There is an important case of Supreme Court in ITC Limited, which is on the question that whether the tips received by the hotel company from its customers, which is then distributed to the employees, would fall within the meaning of salaries to attract the TDS under 192. So basically, whenever you go to hotel, you give some tips, you add it to the amount, right? These days you have been paying through Zomato, Swiggy Pay, right? And there is an option to add the tip. Now, when you add the tip, the amount will first go to the hotel and then it will distribute to the waiters, right? Now, whether this payment of the tips which is collected from the customer and paid to the waiters is amounting to salary on which the TDS should have been deducted. So, the Supreme Court said that for the purpose of falling anything within the salary, there has to be the employer and the employee relationship. Here, the tips which are paid are just collected from the customer and paid it to the waiters. So, the employer receives these tips in the fiduciary capacity. These are not part of the contract of employment. The hotel is not obligated to collect and pay the tips to the waiter. There is no right on the part of the employee to claim the tips from the employer, which are merely just voluntary payments made by the customer. So this cannot be regarded as profits in lieu of salary, and this would not be considered as the part of the income under the head salary. And the customer who is paying the tips is not the employer, right? So there is no liability to deduct the tax under section 192. So in this case, there will not be any TDS which shall be deducted under section 192 because there is no employer-employee relationship. So for the purpose of anything to be taxable under the under the head salary, there has to be the employer-employee relationship existing. Are we clear? Yes or no? So this is about the income under the head salaries, which is you have to consider. In that case, if any kind of question is asked under 192, it could be as a part of the salary structure also, right? Because there they may ask you the question by giving you the different provisions of the salary as well. So that could be one of the kind of question which can be asked on the 192. Clear? So you should be knowing about that particular aspect as well. Any questions, any doubt? Yes, with respect to this? No? Okay. Now the next section which is there is 192. Yes. What is 192A? Yes, students, fast. What is 192A?
If aggregate amount is less than 50,000, no tax, no TDS.
But what is the nature of the 192A, like 192A? What is that section about? On what kind of payment do we deduct the TDS?
Withdrawal from PF.
Yes, that's correct. So 192, which is there, is in relation to withdrawal of the amount from the Provident Fund. Are we getting it? So basically, if you look at, let me take you back here. Yes, 192A is premature withdrawal from PF. So under the Employees Provident Fund, which is there, the employees are eligible to withdraw the funds only after a period of 5 years have passed by. After the 5 years of the continuous service, right? So if the premature withdrawal is made before the continuous service of 5 years, other than in the case of ill health, discontinuation of the business, cessation of employment, if that be the case, of course, this will not apply. But in case I withdraw before 5 years. Now, let's say if you go under the employment, you cannot withdraw prior to the 5 years, right? So in that particular case, if you do that, then the TDS will be deducted on the amount. So rule 9 of part A of fourth schedule provides that the tax on the withdrawn amount is required to be calculated by recomputing the tax liability of the years for which the contribution to the RPF has been made by treating it as contribution to the unrecognized provident fund. Are we clear? So in this particular case, the TDS which is prescribed is 10% on the premature taxable withdrawal. So if the amount is withdrawn, there will be TDS at the rate of 10% on the premature withdrawal. But yes, as you rightly pointed out, it is only applicable when the amount of the withdrawal exceeds rupees 50,000. And this is at the time of the payment. Are we clear? Yes or no? So here the TDS will be there at the rate of 10%. Now very simple section. Let's move to the next one. Interest on securities. 193. Right? This is the interest on any security, not on loan. This is interest on any security or interest on the debentures. What is the rate which is provided? It is 10%. Right? It is at the time of credit or at the time of payment, whichever is earlier. And there is no TDS required on the interest payable on national defense bonds, then national development bonds, NSC or debentures issued by any public sector company, which is basically the Power Finance Corporation, Indian Railway Finance Corporation. On this, there is no TDS which is required to be deducted. Now, these are the bonds which if you deposit it, you will get the exemption under 54 EC. Are we clear? Gold bonds or any security of the central government or the state government. Clear? So this is about the section 193. Now what is the threshold over here? What is the threshold? It is 5,000. In case of debentures issued by a public company, the amount of interest only when it exceeds 5,000, only then there will be TDS under 193. Are we clear? So this is about the 193, which is the TDS on the interest on the securities. Yes, Siddharth. Yes, Samyathan. If 15G, 15H is given, then in that particular case, 192A, there will be no TDS in that particular case. So 15G, 15H is basically the lower deduction certificate or no deduction certificate. So there will not be any deduction of tax under 192A or even under the other sections in case the declaration is given in writing that the TDS is not to be deducted, but that declaration has to be given by the assessing officer. So not the declaration, the certificate. So certificate for deduction is to be issued by the assessing officer in that case. And 15G, 15H are basically form that you give. Yes. Any other question? H, which is there, is the form which can be made in cases where the income of the assessee is lesser than the basic exemption limit. Right? So in that particular case, he will give the form 15H. And in that case, there will not be any TDS deducted if he gives that particular declaration. Are we clear? So declaration in 15G and 15H are given, and this is particularly in relation to the no deduction of the TDS. Any other question? Yes. Fine. Okay. Now, same thing even under the 193. Even under 193, if you give these declarations, there will not be TDS which will be applicable. Yes. Secondly, whether 206AB applies in case of 192A, the answer is no. 206AB, which is the higher TDS on non-filers of income tax return, is not applicable even in case of 192A. It is not applicable in case of salaries. It is also not applicable in case of the premature withdrawal of the PF. Are we clear? Yes or no? Fine. Okay. Now, tell me one particular thing with respect to 194. What is 194 about? What is 194?
Dividend?
Yes, about the dividend. So what is the tax rate on the TDS on the dividend?
10%.
Is 10%, yes. And what is the threshold which is there?
5,000.
How much?
5,000.
Yes. So under 194, the TDS is on the dividend. Here, the dividend which is there, the TDS is 10%, which is given at the time of making the payment or before making the distribution to the shareholder. Now, what dividends are covered over here? 222A, B, C, D, E, F. All of them are covered over here. Right? Now, the TDS is not applicable where the dividend is paid by any mode other than cash. And the amount is less than 5,000. So the threshold here is 5,000 rupees. Clear? The TDS provision will not apply to the dividend credited or paid to the LIC, GIC, subsidiaries of them, a business trust by a special purpose vehicle, paid to a business trust by a special purpose vehicle. Why? Why the SPV will not deduct the TDS when it pays to the business trust? Yes. Why the SPV will not deduct? Yes.
Is it because it is exempt?
What section?
Um, Section I don't know.
But what is it about? We discussed that day. Let me see who answers. Yes.
Government.
Sorry, what?
Government entity.
No. Think about it. Look back in the last class on the taxation of the trust. Yes. Let me see who answers. Very simple. Only if you remember this. What was the answer?
Section 1023 FC.
Yes. What was the section about? What was it saying?
It was saying that dividend received by a business trust from an SPV is
Mm-hmm.
exempt if the SPV has not opted Section
Correct.
115B
Very good.
BAA.
Correct. So if the SPV exercises the option of the concessional tax regime under 115 BAB, in that particular case, there will be the dividend which will be taxable in the hands of the unit holders. Right? Otherwise, the dividend will not be taxable also in the hands of the unit holder. But even in case when the SPV distributes the dividend to the business trust is a pass-through in respect of the dividend income, isn't it? So if it is a pass-through, there is no requirement to deduct the TDS in respect of that. Yes or no? Because it is not taxable in the hands of the business trust. It may be taxable in the hands of the unit holder depending on whether the SPV has exercised the option under 115 BAB or not. But irrespective of anything, the dividend, it is not taxable in the hands of the business trust. So why would the SPV deduct the TDS? The SPV is therefore not required to deduct any TDS in this particular case. Are we following this? That is the reason why there will not be any TDS deduction in this case. Clear? So TDS under 194 will not be applicable. Are we clear about this? So see, you have to be very sure when you are, linking the provisions. That's the reason why we had, talked about this TDS implication there also. Because if you just, read here, you will not be able to remember anything at that point. So you have to link and then study. So only when you will, link this concept with what you're studying under the REIT taxation, you will be able to make clearer point in the exam also. In case the question is asked, there you can write that the TDS is not to be deducted by the SPV when it distributes the dividend to the business trust. Yes or no? Is this very much clear to everybody? Yes. So this can again be asked as a part of the MCQ questions. And you will then, make a wrong answer in case you're not sure about why this is not done. Are we clear? Fine. So in respect of this, there is no requirement to deduct the TDS. Now tell me one thing, can we obtain the lower deduction certificate for the dividend? Can the payee say that you deduct the tax at a lower rate? Yes. Is the lower deduction certificate, can it be obtained? The answer is no. So 15G, 15H cannot be applied in respect of the dividend income. It can be for 192, it can be for 192A, it can even be for 193 interest on securities, but not for dividend. Clear? So one thing what you have to remember with respect to dividend is that when the SPV distributes the dividend to the business trust, at that point in time, there is also no TDS. Clear? When the business trust will distribute it to the unit holders, will it deduct? The answer is yes. So business trust will deduct the TDS on the dividend income distributed if the SPV is exercising the option under 115 BAA. Are we clear? In that case, it will be 10% for resident, non-resident and foreign company under 194 LBA. Are we clear? So if the business trust is distributing and if the SPV is exercising the option under 115 BAA, only then in that case there will be TDS which the business trust will deduct. Clear? Yes or no, students? Yes? Okay. Then what is section 194A? Yes. What is 194A?
Interest other than interest on securities.
Correct. It is interest other than interest on the securities. Now, what is the TDS there?
10%.
It is 10%, right? So, in case of interest other than interest on security, 194A is the section which will provide for the TDS rates, right? So, 194A, what does it provide? That the TDS will be deducted at the rate of the 10%. Right? TDS will be deducted at the rate of 10%. Now, what is the threshold in respect of 194A? Yes. What is the threshold given?
$5,000.
Yes. 5,000. So, here you have to be, we have two thresholds. Yes, Resham, you're correct. So, what is the threshold which is given over here? That the TDS will be 10% only when the interest paid or credited does not exceed 5,000 in normal cases. The limit is 40,000 where the payer is a banking company, a cooperative society engaged in banking business or a post office. Right? In respect of the amount credited or paid in respect of any deposit which is under the senior citizen savings scheme or Mahila Samman savings certificate. Right? So in these cases, the threshold becomes 40,000. So when the interest is paid by a bank, cooperative bank or a post office, the threshold is 40,000. If the interest is paid by any company, then it is 5,000. In respect of the senior citizen, if the payer is a bank or a cooperative society or post office, the threshold is 50,000. Are we clear? And this limit of 40 or 50,000 will be calculated with respect to income credited or paid by a branch of a banking company or a cooperative society in case of the fixed deposits with the banking company or the recurring deposits with the banking company. It is not in the case of the saving bank account. This is only in respect of this 40,000-50,000 threshold which is there, is with respect to the fixed deposits or the recurring deposit, basically the time deposits with the bank or with the cooperative society or with the housing finance company. And this is with reference to the total interest credited or paid by the bank, not by each branch. So each branch will not look at that, okay, my threshold is not crossed more than 50,000 or 40,000. It has to be reckoned at the banking level, at the global level, or at the HO level. We have to see for all the branches together. It is not that, you are maintaining the account with, let's say, Pune branch, then we'll check only with respect to that branch whether it's 40 or 50,000. If you have, let's say, 2-3 accounts, you are maintaining account in Mumbai also, in Bangalore also, in Pune also, then in that particular case, what will happen is we'll see the consolidated interest, whether it exceeds or not. Are we clear? Secondly, interest paid or credited by a firm to any of its partners. So this limit which is there, this is also applicable, or this TDS is not applicable in case the interest is paid by a firm to a partner. In that case, you will not deduct the TDS under 194. Firm pays the interest at the rate of, let's say, 12% to the partner. In that particular case, the TDS will not be applicable under 194A. Clear? The interest paid or credited in respect of deposits which is under the scheme framed by central government. Interest credited or paid in respect of the deposits other than the time deposit, which is basically if the interest is paid on the saving bank account, on that there will not be any TDS under 194A. Income paid or credited by a cooperative society other than a cooperative bank to a member or to such income credited or paid by a cooperative society to any other cooperative society. So any interest which is paid by a cooperative society which is not a cooperative bank and a normal cooperative society to any of its member, or by one cooperative society to another cooperative society, in that case the TDS under 194A will not be applicable. Interest income credited or paid in respect of deposits with primary agricultural credit society or primary credit society or a cooperative land mortgage bank or a cooperative land development bank, or a deposit with a cooperative society other than a cooperative society or a bank referred to in one, engaged in the carrying on of business of banking. So in case you have any deposit with the cooperative society which is not a cooperative bank, right, or which is not a basically this primary agricultural credit society or credit development bank. So basically, if you have interest paid in respect of any deposit with the cooperative bank, in that particular case also there will not be any TDS. So what they are trying to say is the reading of E and F, it can be inferred that a cooperative bank other than this particular cooperative banks, like this primary credit society, is required to deduct the TDS on the payment of interest on time deposit. However, it is not required to deduct the TDS from the payment of interest on time deposit to another cooperative society. Are we clear? Yes? Society is liable to deduct the TDS if the total sales gross turnover is more than rupees 50 crores in the previous financial year and the interest is exceeding rupees 50,000 in case of senior citizen or 40,000 in any other case. Again, this can be, asked as a part of MCQ because most of the students get confused around this particular point. So why you get confused is because, first of all, this limit is there of 40,000 if the payer is a cooperative society engaged in the banking business, right? And it is 50,000 when you are making a payment to the senior citizen. So a cooperative bank has to deduct the TDS when it makes the payment in respect of the deposits, which is fixed deposits or the recurring deposit, right? But if the cooperative society makes the payment of interest to any other cooperative society, are we getting it? In that particular case, it is not required to deduct the TDS. Are we getting this point? So when a cooperative society or a cooperative bank which is there is making the payment to any other pay, it is required to deduct the TDS in respect of the time deposits. It is not required to deduct the TDS on the time deposits also if the payee is another cooperative society. Are we clear? So if you see this particular point, what it says, income paid by a cooperative society to any other cooperative society. Here they are not writing in the bracket other than a cooperative bank. In the first scenario, they have written income paid or credited by a cooperative society other than a cooperative bank to a member, there is no TDS. Basically, cooperative society other than a bank is there, and it is paying to any member, it is required to deduct TDS. But if it is paid by a cooperative society, including a cooperative bank to any other cooperative society, in that case, there will not be any TDS. Are we clear? Yes or no? Clear? And if it is saving bank deposit, in that case also cooperative bank are not required to deduct the TDS under 194A. Clear or not? Is there any doubt with respect to this? Yes? Is this clear, students? Fine? Yes? Okay. So this can be asked as a part of the MCQs also. So you have to be very clear. Now, other than the cooperative bank, the normal cooperative societies will be required to deduct the TDS only when the total sales turnover or gross receipts of the cooperative society exceeds 50 crores in the preceding financial year. Right? Not in the current year, in the preceding financial year, and the interest is more than 40 or 50,000. And they are not required to deduct the TDS if the cooperative society, is required to deduct the TDS on the interest paid or credited by it to its member or to any other cooperative society in respect of deposits with the primary agricultural society, in respect of deposit with the cooperative bank other than a cooperative society engaged in the business of bank. Are we clear about this as well? Yes or no? Fine. So when a cooperative society is paying the income to its member, it is not required to deduct the TDS. In respect of deposits with the primary agricultural society, it is not required to deduct the TDS. In respect of deposits with a cooperative bank, other than the one which is the other than a cooperative society or a bank engaged in the business of the banking, right? So in respect of any deposits with any other cooperative society which is engaged in the carrying on the business of the banking, in that case also there is no requirement to deduct the TDS. So if one cooperative society makes the payment in respect of the saving deposits with a cooperative society, or any interest is paid in respect of any saving deposit with any cooperative society which is engaged in the carrying on the business of banking, in that case also there is no TDS. Clear? Yes or no, students? Is this point clear? Here it should be such cooperative society is not required. It's not is required, it should be not required. Clear? Then the interest paid or credited by the central government, no TDS. Interest paid or credited to the following entities: bank, financial corporation, LIC, unit trust of India, notified institutions. One second. Yeah. In these cases, there is no TDS. Income credited by way of interest on the compensation awarded by the Motor Accidents Claim Tribunal. Income paid by way of interest on the compensation amount awarded by the motor accident where the amount of such income does not exceed rupees 50,000. Then income paid or payable by an infrastructure capital company or in relation to a zero coupon bond. Income by way of interest paid by SPV to business trust under 1023 FC. So again, when the SPV pays to the business trust, there is no TDS because the income is passed through. It is taxable in the hands of the unit holder. So the business trust will deduct the TDS under 194 LBC. Clear? The business trust will deduct the TDS when it pays to unit holder. The SPV will not deduct. Also here, the TDS is applicable in respect of individual or HUF whose total sales, gross receipts or turnover from the business exceeds 1 crore or rupees 50 lakh in the case of profession in the last financial year. Are we clear? So individual HUF was only required in a case where they have the income or they have the turnover exceeding rupees 50 lakh or 1 CR in the preceding financial year. Clear? Any other question? Any doubt? Is this clear? So in case of zero coupon bond, the difference between the price of the redemption and the price of issue, that is what is considered as interest. Clear? Any questions? Any doubt? Okay. Yes. Now, there are certain circulars in relation to the TDS. One is the applicability of provision of TDS under 194A on interest of FD made in the name of the Registrar General of Court. So, see what happens is that sometimes the fixed deposits are kept in the name of the Registrar General because the court sometimes directs that during the pendency of the proceedings, during the pendency of the case, the amount should be kept in the name of the Registrar General to decide as to, whenever the party who wins will get the amount. So it is not known until the case gets decided as to who will be the beneficiary of the fixed deposits, right? So in that particular case, the interest that gets generated on the fixed deposit, now the TDS should be deducted in whose name? Because there is nobody's, nobody's entitled to that FD. So it is provided by the CBDT that in respect of the fixed deposits which are made in the name of the Registrar General of the Court, now the TDS will not be deducted on the interest till the matter is decided by the court. Once the courts decide as to who will get the money which is lying in the FD, the provisions of 194A will apply to the recipient of the income. Clear? Yes or no? Okay. Any questions? Any doubt? Fine. Let us solve some questions in relation to this. Examine the TDS implications under 194A in the cases mentioned hereunder. On 1st October 24, Mr. Harish, aged 45 years, made a 6-month fixed deposit of 10 lakh at 9% per annum with ABC Cooperative Bank. The fixed deposit matures on 31st March 2025. Yes.
TDS is applicable.
Sorry?
TDS applicable.
TDS applicable? Yes. What will be the TDS rate?
10%.
10%. Yes. So here, if you look at it, here in this particular case, Whether the TDS is applicable or not, that is what the question seeks the answer for, right? Now, here, first of all, when you are writing these kind of questions in the examination, you have to be very clearly writing about that what is the section which is applicable is saying, right? So here it is saying that the cooperative bank is there now, which is having the fixed deposit of Mr. Harish. Now, a cooperative bank is required to deduct the TDS at the rate of 10% because the interest is more than how much? 40,000, and he's 45 years, right? So there will be TDS under 194A. Now, what will be the TDS amount? 10 lakh into 9% into 6 by 12, right? Into half, because this is 6 month fixed deposit, right? So in this particular case, there will be TDS because it's a cooperative bank and it is other than the saving bank account deposit. It's a time deposit. Clear? Next one. On 1st June 2024, Mr. Ganesh, aged 35 years, made three 9 months fixed deposit of 3 lakh, each carrying 9% per annum interest with Dwarka branch, Janakpuri and Rohini of XYZ Bank, a bank which has adopted centralized bank or core banking solution. The fixed deposits mature on 28 February 2025. Yes.
TDS has to be deducted at 10% under Section 194A.
And what will be the amount?
It is 20,250 each. So total comes to 6750, which is more than 40,000, the threshold limit.
Correct. So here the interest has to be for all the three fixed deposits. And here, if you look at it, this is bank which has adopted the core banking solution. What is a core banking solution? That they have, they could get the consolidated consolidated accounts of the particular account holder. Are we clear? So in this particular case, there will be a TDS on the entire amount, but for the period of the 9 months. Yes or no? Any question, any doubt? Is this clear? What about the last one? Yes. Yes. What will be the last one?
No TDS.
No TDS. Correct. Yes. So this is no TDS because the amount does not exceed 40,000 rupees. Are we clear? Fine. Next section is 194B, which is winning from lotteries, crossword puzzles, and racehorses, and 194BB, right? Now, what is the tax TDS rate in respect of both? It's 30%, right? Which is in line with section 115BB. Now, what does it say? That any income by way of winning from lottery, crossword puzzles, card game, any other game of any sort, or gambling or betting, and that cases, including the horse races, there'll be income tax at the flat rate of 30%, right? And the TDS will be deducted if the payment exceeds rupees 30,000. When the winnings are partly in cash, partly in kind, then the payer has to ensure that before releasing the winning, he deposits the tax to the government, right? So in this particular case, it has to be ensured that before releasing the price, there has been TDS deducted. Clear? Even under 194BB, in respect of the race horses, it's same 10,000 and the TDS is 30%. Clear? So it's a very, very simple question. Then is, simple section. Winning from the online games under 194BA, it is also 30%. But this has to be deducted at the end of the financial year. Right? So any person who is responsible for paying either to a resident or a non-resident any income by way of winnings from online game, in that particular case, the TDS will be deducted under 194BA. Right? And even in case of the 194B or BB, it is applicable for both resident and non-resident paying both. So again, you will not go under 195 in case of the winnings, online games and the horse races. Are we clear? Now this TDS which is there under the online games is applicable only on withdrawal at the end of the financial year. Right? So in a case where there is a withdrawal from a user account during the financial year, the income tax will be deducted at the time of such withdrawal on the net winnings. Now, where the net winnings which are there are partly in cash, partly in kind, then it is the responsibility of the person who is deducting the TDS to pay the TDS before the withdrawal is made. Now, this is in respect of the online winnings, right? So, if you play any online games, in that particular case, the TDS has to be deducted on the net winning. And what is net winning which is given? Net winning is defined as the amount withdrawn from the user account plus the closing balance of the user account minus the amount of the non-taxable deposit made in the user account and minus the opening balance in the user account. So this is how the net winnings will be calculated. Are we clear? Now what is non-taxable deposit? The amount which is deposited by the user in his user account which is not taxable. So basically, if you put the money in your account to play the games, that will appear as non-taxable deposit. Are we clear? So whatever the amounts which are lying at the end of the year, in that particular case, if there is any amount on the net winnings, you will calculate the TDS either at the end of the year or when you withdraw. Clear? And when a user maintains multiple accounts, so each user account will be considered for the purpose of calculating the net winning. Clear? Yes or no? Fine. So this is again a very important section which has been recently introduced. And this is basically where you have a formula given on which you have to calculate the TDS. Yes or no? Any questions, any doubt with respect to this? Fine. Now, tell me one thing. With respect to whatever sections we have done so far, any questions you have? Yes. Any doubt or any questions that you have? Yes or no, students? Is this clear up till now, whatever sections we have done so far? Yes. Okay. Let us proceed then further. Clear, everybody? Yes. Okay. No problem. Okay. Now, what is 194C? What is 194C? Next section. Your favorite section?
Contractors payment.
Yes. Contractors payment. So 194C is the payment of the amount to the in relation to the works contract. How is works contract defined? Yes, Samyathan, yes, Siddharth, it's payment to contractor, but how is work contract defined? What all does it include? Yes. What is the TDS rate? What are the thresholds? Yes. TDS is 2 and 10. Yes, right. Not 10, Siddharth. It is 1 and 2. Yes. Okay. So, in respect of the works contract, right, you need to fit within the definition of the works contract to fall within the 194C. Right now, 194C is in respect of any payment by to a resident contractor for carrying out any work in pursuance of the contract between the contractor and the person, can be central government, local authority, any company, right? Any university, trust, anybody, or any person who is individual HUF, AOP, or BOI whose turnover in the preceding year is more than 1 crore in case of business and 50 lakh in case of profession. Right? What is the rate of TDS? 1% in case the payee is an individual or HUF, 2% in respect of others. Right? And in case the contractor is in transport business, if the PAN is furnished, it is nil. If the subcontractor is in the transport business, if PAN is furnished, it is nil. What is the threshold? The threshold is 30,000 for one-time payment in a single payment or 1 lakh in aggregate during the financial year. That is the threshold which is given in respect of 194C. Yes, Siddharth. Clear? Now, let us look at this. ABC Limited makes the payment to Mr. X, a contractor, during the previous year 24-25. On 1st March 25, a payment of 30,000 is due to Mr. X on account of a contract work. Whether the TDS will be there? It will be there, right? Because it is more than 1 lakh rupees. Yes or no? So, from the payment that will be made on the entire amount, there will be TDS and not just on the payment which is being made. Clear? Now, what is the definition of the work? Work includes advertising, broadcasting and telecasting, carriage of goods or passengers by any mode of transport other than railways, catering or the job work. Job work means that manufacturing or supplying a product according to the requirement of the customer by using the material purchased from a customer. So I take your material, I do some work on that and I return you back. Like for example, I take the bags from you, do the painting on that bags or some kind of printing on that bags and give the bags to you. I take the t-shirt from you, I make the print on that t-shirt and give it back to you. That's the job work. So work will not include where I am purchasing the t-shirts from outside. I'm purchasing the raw material, performing the designing on that and giving you back. That's not job work. That will not be subject to 194C. When you give me the material, you are my customer. You are only giving me material. I'm performing the work on that and I'm giving you the material back. That is what is the works contract will be on the job work. Are we clear? Yes or no? Now, this is not applicable in case the payment is made in respect of flying, hiring or leasing the goods carriage if the PAN is furnished. And there are less than 10 or less carriages at any time during the previous year. So in case of the transporter, if he has the goods carriage less than 10 at any time during the year, in that particular case, the 194C will not be applicable. And he has to furnish the PAN as well. Clear? Yes or no? Any question, any doubt? Yes. Is this 194C clear to everybody? Okay?
Ma'am,
Yeah. Yes.
if payment made to transporter, we have to deduct TDS, but exemption is there if it is more than, if he owns 10 or more, 10 or
Correct.
less.
10 or less. Yes.
And if job work,
If it's job work, then yes, there is TDS which is there.
TDS applicable. Okay, ma'am.
Any other question? Any other doubt with respect to 194C? Okay? Yes? Fine, everybody? Okay. Now, what is therefore 194D? What is 194D? Insurance commission? Yes, that is correct. It's insurance commission. What is the TDS rate on that? 10% in case of a domestic company, 5% in case of others. Okay. So this is on the insurance commission and the threshold here is 15,000 rupees. So this is on the payment of insurance commission. So those who are running the business of selling the insurance product, it is applicable on them. Okay. Then 194DA is payment in respect of the life insurance policy. So any amount if you get under the LIC is exempt under 1010D. But there are conditions now. Can you tell me what are the conditions? We have seen for 194DA or for the life insurance business in the IFOS class. Yes. Let me see who recollects. What are the conditions for exemption?
Annual premium amount should be less
Correct.
than 20%.
Correct. And there is one more. There is one more condition, students. No Samyathan. Policy should. Yes, Siddharth. Yes, correct. Yes, Mukesh, but I was checking more on the limits, that what are your limits basically in relation to this. I was wanting to check the limit. Yes, Siddharth, you're right. So, in relation to the 194 DA, right, it is on the LIC proceeds that you receive. Now, for the LIC proceeds that you receive, students, if you remember, we had discussion under the income from other sources class. What did we discuss? That earlier the proceeds, the maturity proceeds from the LIC used to be exempt. Only the condition was that the premium should be within the limit of that 10% or 15% or 20%, right? But now there is also an additional condition that the amount of premium should be less than rupees 5 lakh. So premium less than 10 or 15% of the sum assured, and the premium does not exceed 5 lakh. If the conditions are not satisfied, then the amount received on the maturity minus the premium paid will be taxable under 56(2)(13). If the sum is received on the death of person, it is exempt without any limits. If the sum is received on the term insurance policy, again exempt without any limits. Are we clear? So now we have a taxability under 56(2)(13), and this is the TDS provision in connection with that. What does it say? That now there will be TDS on the sum received under the LIC, which is 2%, and the rate of TDS will be the 2% with effect from 1st October 2024. Earlier it used to be 5, now it is 2%. And the threshold is 1 lakh rupees or more. Are we clear? So let's discuss these questions. Mr. X, a resident, is due to receive 4.5 lakhs towards the maturity proceeds of LIC, for which the sum assured is 4 lakh and the annual premium is 1,25,000. Yes. TDS attracted here. So if you look at this question, the annual premium is how much? 1,25,000, which is more than the 10% of the sum assured, right? So the maturity proceeds of rupees, how much are there? 4.5 lakh are not exempt under 1010D in respect of Mr. X. So the TDS will be required at the rate of 2% if the payments are made on or after 1st October 2024. But here the payment is before 1st October 2024. So the TDS rate will be 5%. Yes, Samyathan. Are we clear? So here the TDS, you have to remember that it is 5% before 1st October. After 1st October, it is 2%. So there will be 5% on the amount which is there, amount of income. Now, what is my amount of income? the maturity proceeds, which is 4.5 lakh minus the annual premium which has been paid. So this is on the amount of income which is comprised. It is not on the consideration paid, students. This is on the amount of income which is there. Are we getting it? So on that, you will pay the 5%. Are we clear? So you will not take 1,25,000 as the annual premium. You will take 1,25,000 for the period of 3 years. Because you have paid what? 21, 22, 21, 22, 22, 23, 23, 24. So therefore, your amount will be 75,000. Are we clear? So you have to take the aggregate premium. Clear? Next one, Mr. Y is resident due to receive 3.95 lakh on 31st 12/24 on LIC policy taken on 31/12/2011 for which sum assured is 3.5 and the annual premium is 26,100. Not attracted, yes, Siddharth, since the annual premium does not exceed 20%. That's correct answer. So in this particular case, there will not be any TDS in respect of this. Fine. Next one, Mr. Z, a resident, is due to receive 95 towards the maturity proceeds of LIC, for which the sum assured is 90,000 and the annual premium is 10,000. Yes. Yes, Siddharth, since even if the annual premium is more than 10% of the sum assured, but here there will not, the amount will be taxable, but here there will not be any TDS because the total maturity value is less than rupees 1 lakh. Yes, Samyathan. Clear? So is this 194 DA clear to everybody? Yes or no? Any questions in respect of this? Yes? Fine? Any doubts? Any questions? Okay, let us move further therefore. What is the next section? Yes, 194 double E. What is that? $194 double E.
NSC.
Hmm?
NSC.
NSC. Yes, correct. So 194 double E is in respect of the deposits under the NSC. What is the TDS rate?
%10.
Correct. Here the TDS rate is again 10% in respect of the deposits under the NSC which are there. What does the section say here? Section says that the TDS will be 10% and the threshold limit is 2.5%. National Savings Scheme, right? And it is basically in respect of the amount from the National Savings Scheme which is withdrawn. Next is the commission on the sale of lottery tickets, which is 194G, right? Now, this is in respect of the commission earned on the sale of the lottery tickets. Okay. Now this is the TDS is 2%, but with effect from 1st October 24. Prior to that, it was 5%, and it is on the amount which is more than rupees 15,000. Clear? Next is 194H, which is the commission or the brokerage. Again, in respect of the 194H, which is there, the limits have been revised. The rate has been revised. What is the revised rate? Now, again, here it is 2% in respect of the after the payments made after 1st October 2024. Are we clear? And prior to that, it is 5%. Clear? Now, what are the thresholds here? The thresholds here are 15,000 rupees. So, if the commission or brokerage is less than 15,000, there will not be any TDS. And here, who is required to deduct TDS in case of individual or HUF? The same thing, that if their turnover is more than 1 crore in the last year, or 50 lakhs in the case of professional. And the threshold is 15,000. It is on the commission or brokerage. Clear? Now, applicability of TDS provision on payment by television channels and publishing houses to the advertisement companies for procuring or canvassing for advertisements. So, on this point, there's a CBDT circular. So, what does the CBDT circular of 2016 says? That in case of the advertising business, there is the payment by the advertising company to the television channel or to the newspaper for giving them the slot, right? Now, in respect of this, when the payment happens by the advertising agency to the media company, like during the break, like you was looking at the IPL, right? There were a lot of advertisements which were being given in between, right? So, in this particular case, what kind of TDS will get attracted? So, the CBDT has clarified that no TDS is attracted on the payments made by the television channels or the newspaper company to the advertising agency for booking or canvassing for any advertisement. Are we clear? So, if it is payment by media company to the advertising company for the booking of advertisements, then it's a different thing. So, in this particular case, the CBDT has clarified that in respect of these kind of payments, so the fees which is charged by the advertising company from the media company are nothing but the commission or the discount. So, let's say, for example, a TV channel makes a payment to a production house for the production of program for telecasting as per the specifications of that particular channel. The copyright of the program is also transferred to the TV channel. Right? Now, whether there will be TDS under 194C or 194H. So, here if you look at the program, if it gets produced by the production house on the basis of the requirement of the channel, and the copyright is also getting transferred to the channel, then this is a kind of job work, isn't it? You are taking the raw material from me, doing work on that as per my specifications and giving it back to me. So there will be TDS under 194C because it classifies as the work, isn't it? But in case where the fees are taken by the advertising company for booking of advertisements, and there in between I retain certain commission, in that particular case only 194H will get attracted. Are we clear? Yes or no? So the 194H is on purely the commission which is there. Right? So it should be a kind of commission and should not be in the nature of the job work. Yes or no? It should be either on the commission or on the brokerage. Is it clear, students? Yes or no? 194H, is it clear? Now, another important case law which is there, it is Ahmedabad Stamp Vendors Association. Now, this is a Supreme Court decision where the question was, can discount given to the stamp vendors on the purchase of stamp papers be treated as commission or brokerage to attract the TDS under 194H? So the Supreme Court answered that although the government has imposed the restrictions on the licensed stamp vendors, the stamp vendors, when they purchase the stamp papers, right, they purchase it at a discount and sell it at a higher price. But this contract is on principal to principal basis and there is no contract of agency. For commission or brokerage, there has to be the commission given from one person to another who acts on behalf of the first person. So therefore, the agency element is required in respect of any transactions for qualifying under 194H. So when the stamp paper vendors take the stamp papers at discount and give it back to the customers at a higher price, they are doing the buying and selling of goods on the principal to principal basis and not on the commission or agency basis. And therefore, there will not be any TDS under 194H. Are we clear? The other decision of the Supreme Court in respect of 194H is in case of Prasar Bharati. Now, in this case, the Prasar Bharati, which runs the Doordarshan channels, right? Now, for the purpose of putting the advertisements, as I was talking about, they had entered into agreement with the advertisement company. Now, these advertisement companies they had a requirement to give a minimum annual business of 6 lakh rupees to the Doordarshan and also furnish a bank guarantee. And these agencies, the advertisement agencies which will there, they will retain 15% commission out of the amount which they collected from the customers and pay to the Doordarshan. So, the advertisement agencies, they took the amount from the customers, from the businesses who want to put advertisement. Let's say Nirma soap is there, Lifebuoy is there, they want to put advertisement on Doordarshan. They will pay to the advertisement agency and advertisement agency will retain 15% and give it back to the Doordarshan. In this particular case, whether 194H is applicable, but here how will you apply 194H? Because Doordarshan is not paying the amount. The advertisement company is retaining and then passing on the balance payment to Doordarshan. So whether your 194H will be applicable? So here the amount is retained in the nature of commission by the advertisement agency. And this was a purely agency agreement because the advertising agencies were functioning on behalf of Doordarshan. So even if the amount was retained by the advertising agencies, the TDS was to be deducted. If they couldn't deduct, they would have to pay it directly and ask them to reimburse for the same amount. The CBDT has clarified, however, that the TDS under 194H will not get attracted on the retentions which are made by the advertising agencies from payment remitted to the TV channel. Because they have identified that the relationship between the media company and the advertising agency is that of a principal to principal basis. However, this Supreme Court ruling, here it has said that they are acting as agents. So the Supreme Court had held that the Doordarshan and its agencies were working on the basis of principal and agent and therefore the TDS was required to be deducted. However, where the media companies and advertising agencies are acting on principal to principal basis their agreement, in that case the TDS will not be applicable. So one has to look into the agreement to identify that whether the TDS will be applicable under 194H or not. Because in Doordarshan case, the agreement clearly mentioned that here there is the agency relationship which is established. Whereas in the CBDT circular, what they have said is that if the agreement says that it is on principal to principal, there is no requirement of deducting the TDS. Are we clear? Next case is of Bharti Cellular. In that case, the question before the Supreme Court was that whether the cellular mobile telephone service providers are required to deduct the TDS under 194H on the difference between the price at which the recharge vouchers are purchased by the distributors and sold to the customers. So the distributors earlier used to purchase the recharge vouchers from the company at a lower price and then sell it to the higher price, just like the stamp paper. So here also the Supreme Court identified that whether there exists a principal agency relationship. So here the Supreme Court noted that this is not a case of agency. Here there is no agency relationship between the distributors and the assessor. The distributors are paying the discounted price irrespective of whether they will sell the recharge vouchers or not. And if they want, they can sell at the price which is below the MRP. They are able to decide the price up till the MRP. Here they are purchasing again on principal to principal basis. There is no agency relationship. And in fact, the taxpayer also does not know, the telecom operator will not know at what price they will be actually selling it. And therefore, there is no possibility to deduct the 194H TDS. And here in this case, therefore, 194H will not be applicable. Are we clear about this? Yes or no? Any questions? Any doubt? Yes? Yes or no, students? Fine. Another decision of the again Supreme Court in case of Singapore Airlines. The question was whether the additional income earned by the travel agent over and above the minimum fare fixed by airlines is subject to TDS under 194H. Now what here happens is that in the this aviation sector, there is a base fare which is set by the ITA. There's a base fare for the air tickets which is set by the ITA, and there is some discretion provided to the airline company to sell their tickets for a fare lower than the base fare but not higher. So there is a minimum, there is a maximum fare which is set, because otherwise they can like keep on increasing the prices of air ticket, and this will become non-affordable for the passengers. So they have set a base fare, so the airlines can sell below that but cannot go above. Right? So the airline operators are required to provide a fare list to the DGCA, Director General of Civil Aviation, for approval. And the prices which they give or which are approved by DGCA may be lower than the base fare, but certainly cannot be higher than the fare which is set by ITA. Now what ITA does is, it would provide the blank tickets to the travel agents who are acting on behalf of the airlines. For example, Go Ibibo, Make My Trip, right? They will give them the blank tickets to sell these travel tickets. Now the arrangement between the, let's say, Make My Trip and Indigo will be that there will be a passenger sales agency agreement entered, right? And basis which the Make My Trip Go Ibibo will sell the flight ticket with the other services. Now once these tickets are sold, the commission which is designated by ITA would be paid to Make My Trip for its services as a standard commission, which will be based on the base fare and not the price at which the Make My Trip is selling. So the base fare is the maximum fare. So Make My Trip is earning the commission, which is a standard commission, on the base fare which is set by ITA. Secondly, it is also earning the commission on the difference between the price at which the airline wants it to sell and the price at which it is purchasing these tickets. So on the standard commission, there will be of course 194H. There is no question about that. But there is also the amount at which the tickets are finally sold by the travel agent to the customer, which will also be having some profitability for the customer. Now, airlines would have no control over the actual fare at which the travel agents would sell the ticket. So the additional amount that the travel agents are charging over and above the fare that is quoted by the airline would be retained by the agent as its own income. Are we clear? This is their supplementary commission. Now the question is whether on this supplementary commission there will be TDS under 194H. So the court in this case said that the 194H does not distinguish between the direct and the indirect payments. Both fall under commission. And there is a principal-agent relationship which is established. Now the tickets are the property of the airline. And what is given to the agent is to just sell the ticket of the airline. So they are definitely working on behalf of the airline. So what did they say is that notwithstanding the fact that the airline is not able to control the actual fare, but whatever the amounts are received by Make My Trip are on behalf of the airline. And once these payments which are made to them by the ITA, whether in the form of standard commission or supplementary commission, on both the TDS should have been there under 194H. So here if you see they have given an example also. This is let's say the base fare which is set for airline, right, by the ITA. And the net fare is set by let's say the airline. I think their amounts have just gone. This is the actual fare which is set by the travel agent. Now there's a standard commission of 1 lakh rupees which is 7% of 1 lakh which is 7,000. On this there is 194H. But on this supplementary commission which is the actual fare, let's say 80,000 minus the net fare which is set by airline 60,000, this also is subject to TDS. Are we clear? Any questions? But the case of the supplementary commission is similar to Bharti Airtel. See, in Bharti Airtel, the case is that they have to purchase the basically recharge vouchers at discount, and then whatever they are selling at can be at any price, but less than MRP. It is similar. But there they are doing it on principal to principal basis because once they purchase the recharge voucher, it just belongs to them. Here they are selling the ticket which is belonging to the airline. So they are working on behalf of airline, Siddharth. So therefore here it is the case of TDS applicable on this. See, the Bharti Cellular is more similar to the stamp paper case, where you are purchasing the stamp paper at a discounted price and then selling it at a higher price. Are we clear? Yes? Any questions? Any doubt? Fine? Okay. Let us therefore take a break over here and then we get back after the break. Let's take a break of 10 minutes. 194I, what is that? What is 194I? TDS on rent, right? So it is 2% in respect of rent for plant, machinery, equipment, 10% for other rental payments, right? And for the case of individual or HUF is only required to deduct if their turnover is more than 1 crore or 50 lakh in the last year. And 194I will not be applicable in respect of any rent paid to a business trust. Why so? Because of the pass-through nature, isn't it? Because of the pass-through nature, there will not be any TDS which is done on the rent paid by the business trust to the rent paid to the business trust. Right? What is the threshold limit? 2,40,000. Here the threshold limit is 2,40,000, and rent here means the rent in respect of the land, building, plant, machinery, furniture, equipments, all of that. Next is with respect to the payment to the cold storage owners in respect of cooling charges, whether 194I will be applicable on that. So the CBDT has clarified that in respect of the cold storage, the payment is not space is given. It is for the preserving of the perishable goods. And storage of goods is just incidental in nature. So this is a contractual arrangement, and 194C should be applicable and not 194I. In respect of the passenger service fee, which is paid by an airline to an airport operator, whether 194I will be applicable. Again, the CBDT has clarified that in respect of passenger service fee by the airline to an airport operator, here 194I will not be applicable because this is not for the use of the land and building. Here, use of the land and building is merely incidental. This includes the fees for the usage of the airport as a whole, the facilities on the airport as a whole. So therefore, your 194I should not become. Are we clear? So this is the CBDT circular which have been given in relation to the 194I. Any questions with respect to 194I? Yes? No questions? Okay. Now, in respect of the 194I, as I said, there are also the Supreme Court ruling which is on the same point of the fees in respect of the landing and parking charges which are paid by an airline company to the Airport Authority of India, whether 194I will be applicable. So the Supreme Court had said that these charges are again not for the use of the land, and this is with respect to the parking of the aircraft. These are for the facilities, same as the passenger service fee which is there. So here 194I should not get attracted. Even in respect of the parking charges, 194I should not get attracted because this is for the use of the facility as a whole of the airport which is there. It is not in relation to the land rent which is there. Clear? Next decision is again of the Delhi High Court in Indus Tower. The question was, is payment made for the use of passive infrastructure facility for the mobile towers? Will it be subject to 194C or 194I? So the telecom operators, right, when they have the telecom towers installed, right, on the buildings and all, now they basically rent out the premises and install the equipment on the terrace. Now the intention is to use the equipment or the plant and machinery. The use of the premises is only incidental. So, but this is for the use of the equipment. So yes, there will be TDS under 194I at the rate of 2% which is for the plant and machinery. Are we clear? So yes, there will be TDS with respect to the usage of the equipment. The next question is in respect of the owned property. Would the threshold limit mentioned in 194I will be for each owner, or is it for the complete amount of rent? right? So if I make a payment of rent to a co-owner, basically if the property is co-owned, then 194I limit is applicable for the rental or is it for the each owner? So the Allahabad High Court has clarified that the payment of rent is made to each co-owner by a separate check and the share is also definite. So the limit of 2,40,000 which is given under 194I is qua each co-owner and not qua the rental amount. So if your rental is more than 240, but if you are paying individually less than 240, then in that particular case, the TDS will not be applicable. Are we clear? Next is the Gujarat High Court ruling in Sri Mahalakshmi Transport. Here the question was, will the payment made by the SSC who is engaged in the transportation of building material and transportation of goods to the contractors for hiring the dumpers will be treated as rent for machinery and equipment? And will there be TDS under 194I or 194C? The Gujarat High Court noted that the assessee has not made the payment for hiring of dumpers. He has given the entire contract for the transportation of goods. He is not renting out the machinery. So therefore, the transaction is in the nature of contract for transporting of goods and not for the hiring of the machinery. And therefore, there will not be TDS under 194I. Rather, there will be TDS under 194C. Are we clear? Yes. So, this is about the 194I. Now, next is 194IA. What is 194IA? Yes. What is 194IA, students? Yes. TDS on the purchase of immobile property, not on rent. TDS on the purchase of the immobile property or sorry, transfer of the immobile property, right? So every person who is making the payment of consideration for the transfer of immobile property, land other than the agricultural land or building to a resident transferor shall deduct the TDS at the rate of 1% of the consideration or the stamp duty value, whichever is higher. And the consideration only when it is more than 50 lakh, only in that case the TDS under 194I is there at the rate of 1%. Now it has been clarified that in case there is more than one transferor, in case there is more than one seller or more than one buyer in respect of immobile property, then the consideration for the purpose of TDS will be the aggregate of the amount which is payable by all the buyers to all the sellers. This is not like 194I. Under 194I, you have the 2,40,000, you have a judgment which says that 2,40,000 will be applied qua each co-owner. But in respect of the 194IA for the purchase or the sale of immobile property, in that particular case, they are saying that 50 lakh will be applied with respect to the aggregate amount which is paid by all the buyers to all the sellers. So even if the property is bifurcated between the two, there are two co-owners, then 50 lakh will not be applied for each co-owner. It will be combined consideration for the sale of the property. The threshold will be with respect to the sale of property and not with respect to how many buyers are paying or how many sellers are selling. Clear? Yes or no? Here, there is no requirement to obtain the tax deduction account number. So, in all the other cases, the buyer or the payee has to obtain the tax deduction account number to deduct the tax and pay it to the government, the payer. But in this case, the buyer is not required to obtain the tax deduction account number. He can just deposit the tax based on his PAN. How will the TDS will be bifurcated under 194I? See, the TDS can be bifurcated basis the amount that you are paying to each of the parties. But for the purpose of the counting the limit that whether you are required to deduct the TDS or not, in that relation, the 50 lakh limit will not be applied regarding each co-owner. Clear? In respect of the consideration of the immobile property, it will include all the charges, club membership fee, car parking fee, electricity, water facility, maintenance. All these charges will be included as a part of the consideration. Are we clear? Yes or no? Let us look at this question. Mr. X sold his house property in Bangalore as well as rural agriculture land for consideration of 60 and 15 lakh respectively to Mr. Y. He has purchased the house property and the land in the year 2023 for 40 and 10 lakh. Stamp duty value on the date of transfer is 85 and 20 lakh. Examine the tax implication in the hands of Mr. X and Mr. Y and the TDS implications in the hands of Mr. Y, assuming both X and Y are Indian residents. Now, first in the hands of Mr. X, what about the house property of 60 lakh? Yes. $60 lakh TDS applicable? Yes, it's not only about TDS. What will be the capital gain? Yes, Pastor. Capital gain will be 45 lakh. Yes. So if you look at here, the amount which is paid here is 60 lakh is my sale consideration, right? But there is a stamp duty value as on the date of transfer, which is 85 lakh. Now, as per section 50C, you will adopt the stamp duty value because this exceeds 110% of the consideration. So, we will take stamp duty value of 85 minus the cost of 40. Now, this is the short-term capital gain as it is sold within 24 months. So, there will be the capital gain of 45 lakh, short-term capital gain of 45 lakh. As far as the rural agricultural land is concerned, yes, no capital gain because it is not a capital asset. What will happen in the hands of Mr. Y? What will happen in the hands of Mr. Y? Yes.
It's 85 minus 60. 85 minus 60. So 25 will be taxable in the hands of Y.
It will be taxable in the hands of Y also. In case the immobile property is received for inadequate consideration and if the difference between the stamp duty value and the actual consideration exceeds the higher of 50,000 and 10% of consideration, right? So 85 lakh minus 60 lakh, right, which is the sale consideration, 25 lakh would be taxable in the hands of Mr. Y under 56(2)(10). As far as the rural agricultural land is concerned, there will not be any 56(2)(10) because this is not a capital asset and therefore does not fall within the definition of the property. Are we clear? What will be the TDS? What will be the TDS on? 1% on 85 lakh. Correct. There will be TDS on the stamp duty value. Are we clear? Fine. Next is section 194IB. See, you have done 194I, which is payment of the rent, right? And this is with respect to the rental in respect of the immobile property, land, building, plant, machinery, equipment, everything, right? And this was about 2.4 lakh. The TDS is 2% on the plant, machinery and equipment, and for the building and furniture, it will be 10%, right? Now, this in case of the individual or HUF who have their turnover more than 1 crore or 50 lakh in case of profession in the last year, they are required to deduct the TDS under 194I. As far as if their turnover is less than 50 lakh or 1 crore, in that case, if they are making the payment of rent, then 194I will not be applicable. In that case, you will have something called as 194IB. So 194IB is applicable in respect of only individual or HUF who has a turnover less than 1 crore or 50 lakh in the last year. The TDS in that case is 2% with effect from 1st October 2024. 1st October 2024, the TDS is 2%. Prior to that, it was 5%. Are we clear? Now, you don't have to get confused that this is only applicable if the individual has the turnover less than 50 lakh or 1 crore in the case of business in the last year. Remember this point very carefully. Are you getting this? So do not make a mistake in the examination. You have to be very sure in respect of what you are doing in the exam. If the question tells you that the individual's turnover is more, then in that particular case, it will be under the 194I. Else, it will be under 194IB. Are we clear? Yes or no? Yes. So remember this particular point very clear. And here the threshold limit in 194I is 2,40,000. Here it is 50,000 rupees per month. It is not an annual threshold. This is a threshold which is 50,000 rupees per month. So if the individual is paying, if a salaried individual is also there, which is paying more than rupees 50,000 per month, then in that particular case, there will be TDS under 194IB. And this you have to deduct in the last month. Are we clear? This you have to deduct in the last month. Okay? Are we clear about this or not? Any questions? So if in the exam they have given that there is a salaried individual, then in that particular case, if they are paying more than 50,000 per month, then you have to deduct TDS at the rate of 2%. Clear? And here also the payer is not required to obtain the TAN. Clear? And in case the payee does not have the PAN, then the provisions of 206AA apply, which says that the TDS will be at the higher rate of 20%, right? In that case, the TDS, if 206AA is applicable, then the tax will not exceed the amount of the rent for the last month. Clear? Any questions? Any doubt? Yes or no, students? Is this particular point clear to everyone? 194IB. Clear? Okay. Next is 194IC. This is in respect of the Joint Development Agreement. Joint Development Agreement, what is that? We have done that in the capital gain class. Can anybody explain me? Yes. Can anybody explain me what is Joint Development Agreement? Yes, when we get the share of flat constructed by building. So if you remember, we had done that when in case you have a land which you are transferring it to the builder to develop a property on that, and in consideration you get the share of profit, share of a flat or share in that particular building, that is under the specified agreement, right? Now, when you transfer the land to the building, it is considered as transfer under 247, enjoying the possession of the immovable property, right? But this will be the capital gain will be taxable in the year in which you receive the completion certificate. Are we clear? In the year which you receive the completion certificate. Now, what will be the tax amount? The sale consideration will be the FMV of the or the SDV of the property, the share in the building that you receive as on the date of completion certificate, right? And there may be certain amount paid in cash also, right? Certain amount may be paid by the actual amount of consideration. In that case, when the actual consideration is paid, there will be TDS under 194 IC, which will be 10%, and this will be on the agreement. This will be on the consideration which is paid to you other than the share in the flat. Are we clear? Yes. Next is 194J, fees for professional or technical services, right? Now, this is applicable in respect of every person other than an individual or HUF whose turnover is less than 1 crore or 50 lakh in the last year, right? Now, here it covers fees for professional, fees for technical, any remuneration, fees for or commission to a director of a company who is not the employee of the company, royalty or non-compete fee. The TDS rate is 2% in case of FTS or royalty, where the royalty is for the consideration for sale, distribution or exhibition of cinematographic film, 10% in the other cases. In case of the assessee engaged in the business of operation of call center, the TDS will be 2%, right? The threshold is 30,000 and this is a separate threshold for each of the amount. So there is 30,000 is a threshold for FTS, 30,000 is a threshold for professional service. For the royalty, you have 30,000. For the payment to the director, it is nil. It is 10% directly without any threshold. For again the non-compete fee, it is 30,000. Are we clear? So this is section 194J. Clear? Yes or no? Now, what is the meaning of FTS? FTS is as per the 917, which means professional, technical or consultancy. Professional services means what? Whatever are rendered by the person which are under the notified professionals, which is film artists, company secretary, CA, CS, umpires, sports person, coaches and trainers, event managers, physicians, commentators, anchors, sport columnists, all of that will fall under the technical service. Clear? Now again, there is a CBDT circular on this point which says that whether the third party administrators are liable to deduct the TDS under 194J on payment to the hospitals on behalf of the insurance company. So what happens is, like when you go for the medical treatment, right? You have this cashless facility, isn't it? Where you give your medical card or the insurance card and they say that, okay, we will process this and there will be no amount that you are required to pay to the hospital. How do they do that? They have the third party administrator, right? Who are sitting and liaising between the insurance company and the hospital. So the third party administrators will make the payment on behalf of insurance companies to the hospital for the settlement of the insurance claim. You must have heard this term when you go to the hospital, go to the pays the third party. So in this case, whether they are required to deduct the TDS under 194J on all the payments to the hospital because the hospital is rendering the technical fee. So the CBDT has clarified that yes, they are liable to deduct the TDS. This is because the services are the medical services and therefore on all the insurance claims passed, there will be the TDS which will be applicable. Clear? Next is whether the transaction charges paid by the members of the stock exchange for availing the automated online trading facility by the stock exchange will be liable for TDS under 194J. So the Supreme Court in Kotak Securities has held that no, this is not a technical service because there is no human intervention. It is a general service which is provided to all the members of stock exchange. This is not a customized or specialized service and therefore there will not be TDS. So for qualifying any fees as technical fee, there has to be human intervention. It should not be entirely automated service and it should be a customized and specialized service and not a general service. Clear? Next is consideration for the use or right to use the computer software. Is it royalty? Because if it is royalty, then there will be TDS under 194J. So it has been clarified by the Supreme Court that this is not royalty if there is the tax treaty between the India and the other country. And if there is a person who is a non-resident who is selling the computer software. But as far as the Income Tax Act is concerned, the explanation 4 to section 916 which defines the royalty provides that the consideration for the use or right to use of a computer software will always be a royalty. Right? So the TDS will have to be deducted under 194J for purchasing a computer software, since the same is royalty as per the Income Tax Act. However, if you are coming from a country with which India has a DTAA, then in that case, relying on the Supreme Court ruling in the engineering analysis, you can see that this is not royalty. The central government has issued a notification which says that once the purchaser of the software deducts the TDS under 194J, and then if he resells the software to the customers or to another reseller, then there is no further TDS required on every tranche of the resale that is happening. So on every resale which will happen, there is no TDS which is required to be deducted. So if let's say A sells to B, B deducts the TDS. Now B sells to C. So C is not required to again deduct the TDS. So if the software is subsequently transferred without any modification, TDS has already been deducted under 194J or 195 in case of non-resident, and the purchaser, final purchaser or the customer is obtaining a declaration that on the first sale, TDS has been deducted, then again there is no requirement to deduct TDS on every resale or every transfer which is being made. Are we clear? Yes, any questions with respect to 194J? Yes? Fine. Now, another important point in respect of this is, as I said, that you have to remember for the computer software, there will be TDS in case it is purchased from a resident. In case which it is a purchase from a non-resident, there may not be TDS because in that case, they may come from a treaty country. If they do not come from a treaty country, then it's a different question. But otherwise, there will be TDS applicable. Clear? Yes or no? Any questions? Any doubt? Fine? Okay. Now, what is in case of the individuals or HUF whose total turnover for the last year is lesser than 50 lakhs or 1 crore in case of business? In that particular case, students, you have a section called as 194M. If they make the payment of the technical fee or the professional fee to any person. So see, the way you had it for the rent, 194I and 194IB. Similarly, you have something called as 194J and 194M. So 194M is applicable in case the individual or HUF is making a payment for the technical fee, consultancy fee, and the turnover is less than rupees 50 lakh or the 1 crore. In that particular case, you have something called as 194M. And this is applicable not only in respect of the FTS, but in respect of the works contract, commission, brokerage, both. So in those cases, 194C, 194H, 194J, where it is not getting applied because the individual or HUF's turnover for the last year is less than 50 lakh or 1 crore, In that case, still 194M can apply. The TDS under 194M is basically again 2% with effect from 1st October 2024. And the threshold limit is 50 lakh rupees. So it's a very high threshold. For example, if you're getting the interiors done and where you make the payment of more than 50 lakh, there this will be there. Are we clear? So this is for 194J, 194C or 194H. In all the three cases where it is not becoming applicable, they will have to deduct under 194F. And here also they have no requirement to obtain the TAP. So if you see this example, Mr. Ganesh, an individual carrying on a retail business with turnover of rupees 2.5 crores in the previous year 23-24. He is making the contract payment for repair of house, rupees 5 lakh. So what TDS will be deducted over here? Yes, even if it is for personal use, TDS will be there. $194M or $194C? It will be $194C or $194M. $194C is not attracted over here since the payment is for the personal use, right? This is for the repair of the residential house. So here 194C can't get attracted even if his turnover is more than rupees 1 crore for the last year. Even in that case, this year 194C can't get attracted because this is for the personal use, and for the personal use 194C is not there. So TDS, whether under 194M will get attracted in this case. Therefore, whether you will deduct the TDS under 194M?
No.
No, right? Because the amount is less than rupees 50 lakh. So even 194M will not be applicable. Payment for commission to Mr. Walish for business purposes, 80,000 in November 2024. Yes. TDS under 194H? Yes, that's right. There will be TDS because his turnover is more than 1 crore. So there will be TDS under 194H on 80,000 at the rate of 2%. Mr. Rajesh, a wholesale trader whose turnover was 95 lakhs. Contract payment for the reconstruction of the residential house. 20 lakhs in Jan, 15 lakhs in Feb and 20 lakhs in March. $194M? Yes, because the amount exceeds rupees 50 lakh. So there will be the TDS under 194M at the rate of 2%. Clear? Mr. Satish, a salaried individual, payment of brokerage for buying a residential house 51 lakh.
Yes, ma'am.
194M? Yes,
Yes,
here
ma'am.
which will not be applicable. Clear? Because this is the turnover is not more than 50 lakhs or 1 crore. Dheeraj, a pensioner, contractor payment 48 lakh for reconstruction of residential house. No TDS. Clear? Okay. Next is TDS on cash withdrawal, section 194N. Now 194N provides that every person which is a banking company, a cooperative bank or a post office which is making the payment of any sum in cash exceeding rupees 1 crores, 1 crore rupees, has to deduct the TDS at the rate of 2%. So this will be deducted by a bank or a cooperative bank or a post office where the cash withdrawals are made. And in that case, if it is more than 1 crore, then in that case, the 2% will be TDS. If the recipient is a cooperative society, the person who is withdrawing is cooperative society, the threshold is 3 crore rupees. Right? Now, they have to deduct the TDS at the rate of 2% at the time of the withdrawal of the sum. Are we clear? Now, in case the withdrawer is not filing the return of income for the last 3 years and the time limit of 139(1) has expired, then in that particular case, what you need to see is the payment which is made, the withdrawal which is made is more than rupees 20 lakh in cash. So there the threshold is if the person has not filed the return of income for the last 3 years and the time limit of 139(1) has expired. In that particular case, the threshold will be considered not 1 crore but 20 lakh. And the TDS will be 2% if the withdrawal is more than 20 lakh but less than 1 crore, or 3 crore in case the withdrawer is the cooperative society. If the withdrawal is more than 1 crore or more than 3 crores for the cooperative society, the TDS will be 5%. So what they are trying to say, if you are withdrawing in cash, then it is 2% TDS if the withdrawal is more than 1 crore. If the person who is withdrawing is a cooperative society, threshold is 3 crores. If I have not filed the income tax returns for my last 3 years, then the threshold will be 20 lakh. So if the amount of withdrawal is more than 20, less than 1 crore or 3 crore, it will be 2% TDS. If it is beyond 1 crore or 3 crore, it will be 5% TDS. Are we clear? Any questions, any doubt? Again, this is very, very important. Whether we need to submit proof? Yeah, this is a very good question. I was coming on to this question. So, the question is that whether the account holders have to furnish the proof that they have been filing the returns of the last 3 years. The answer is no. The reason is, students, that the income tax has developed a utility where you have to just insert the PAN. Once you insert the PAN, it will give the information that whether the person has been filing the returns or not for the last 3 years. If they have not been, then in that particular case, it will appear in the income tax utility itself, and therefore the limit will be decided on that basis. Are we clear? So the income tax has developed that utility already. Clear? Let us look at the example for this. Mr. Harshit is withdrawing from SBI. The amount of withdrawal is 1 crore 10. So if you see, the TDS will be on the 10 lakh rupees, which is more than 1 crore. It is not on the entire amount of withdrawal, because here it says is that the amount in excess of rupees 1 crore. So if you see, what they say is that the person who is responsible for paying any sum in cash exceeding rupees 1 crore. So 2% of the excess will be collected, not on the entire 1 crore 10 lakh. It will be only on the 10 lakh, which will be the TDS applicable. Are we clear? In case of Mr. Pranav, who is withdrawing from SBI, it is 90. So no TDS because it is less than 1 crore. Yes, utility is utilized by the bank, Samyathan. ABC Cooperative Society is there, which is withdrawing 2 crore 70 lakh. Now here there will not be any TDS because for the cooperative society, the threshold is 3 crores. XYZ Cooperative Society is withdrawing from a cooperative bank 3 crore 10. So on 10 lakh, there will be TDS of 2%. Mr. Vaibhav is there who is withdrawing 2 crore 10. So on 1 crore 10, there will be TDS. The Mr. A Limited is there. It is withdrawing 1 crore 5. So only on the 5 lakh, there will be TDS. If you see in the next case, it is 90 lakh. So, it is 9. How much is it? 90 lakh. But this is a firm, I think. Why they have considered your 70 lakh? I'm not sure why they have considered your 70 lakh. 90 lakh is less than 1 crore. So there should not be any TDS. Mr. Varun is there in case of Bank of India 1 crore 20 lakh. I think here there is some information which is missing. Okay, here they have given. So the persons mentioned in 7 to 10 have not filed the return for the last 5 years. Okay, they have given this information. So if they have not filed the return for the last 5 years, 7 to 10, that's the reason why this is 90. So for them, the threshold is 20 lakh. So in 70 lakh, there will be TDS. Yes. In case of Mr. Varun, again on 80 lakh, there will be TDS of 2%. On 20 lakh, there will be TDS of 5% because it is more than 1 crore. So the amount exceeding 1 crore, there will be TDS on 20 lakh. The amount exceeding between 20 to 1 crore, on 80, it will be 2%. It is not going to be the case like on entire 1 crore, there will be TDS of 5%. It's not like that. Mr. Rakesh, 45 lakh, again, here on 25 lakh, there will be TDS of 2. Here, this is a cooperative society. So on 3 crore 30, right? So on 2 crore 80, there will be 2% TDS. On the 30 lakh, there will be 5% TDS. Are we clear? Yes or no? Is this question clear to everyone? Then the TDS on certain payment by the e-commerce operator to the e-commerce participant, 194O. This is the TDS which is applicable where there is sale of goods or the provision of services by a resident e-commerce participant. E-commerce participant means a buyer, seller, or a one who is providing the services through an e-commerce platform which is operated by e-commerce operator. E-commerce operator can be resident or non-resident. In that case, the e-commerce operator is liable to deduct the TDS at the rate of 1%. Again, this is revised from 1st October 24 to 0.1%. Right? And the TDS here is not applicable under 194O if the amount of the gross sale or services is less than rupees 5 lakh. Are we clear? So in this particular case, here you have to remember whenever the e-commerce participant is selling through the e-commerce operator, in that particular case, the TDS will become applicable. This is even applicable in the case of the payment gateway transaction. So if you see, there are Razorpay, Paytm, right? The payments are facilitated by the payment gateway, right? So in that particular case, the TDS will be applicable even in that case. Clear? So the payment gateway will therefore deduct and pay the amount. Any questions, any doubt with respect to 194O? Yes? Is it clear? Let us take some examples with respect to this. Okay. So let us understand this, how this particular transactions with respect to e-commerce operator work. See, this will be like that. There may be a buyer who is an e-commerce participant. There may be a seller who will also be an e-commerce participant, right? And there will be an e-commerce operator in between. One will be from the buyer side, one will be from the seller side. And the consideration will be flowing from the buyer to the seller. In this case, the TDS is required to be deducted by the seller e-commerce operator. Right? So let's say, for example, a very good case of this will be, let's say, I am a website. I am developing a website, okay, which is for the buy and sale of goods or services, right? Now, I am purchasing some goods through the website. And this website, in fact, is having, let's say, a payment gateway also. So there will be a payment gateway which will also be e-commerce operator. There will be the Amazon, which is also an e-commerce operator. So in that case, who is required to deduct the TDS? Both will be in fact required to deduct the TDS. But in case there is only like buyer and seller, and both have their own e-commerce platform, then it is the seller e-commerce platform which is required to deduct the TDS. Are we clear? Next is, if you look at this particular transaction, there is a buyer e-commerce participant. He buys goods worth of goods 100 and pays the delivery charges of 18. So it is 118, right? Now, this is the e-commerce operator of buyer who retains 100, receives 118, retains 1 rupee as the platform fee and pays 117 to the seller e-commerce operator. Now this retains 2 rupee as the platform fee and pays rupees 115 to the final seller. So the seller is actually selling the goods of rupees 100 to the buyer, in which 5 rupees is the packing fee, 10 rupees is the shipping fee and 3 rupees is the convenience fee, which makes it to 118. But he is receiving only 115 from the seller e-commerce operator. So he is required to deduct the TDS on the gross consideration of 118 and not on 115. Are we clear? Yes or no? Is this clear? So whatever amount is there, it is on the gross amount that one needs to deduct the TDS and not on what is received by the seller finally. Is it clear? Yes or no? Any questions? Any doubt? Yes, students. Is this clear? I'm not getting the answers. Yes?
Yes, ma'am. Yes, ma'am.
Okay. Now see, 194 over again, you can receive the questions in relation of the case studies also, right? You can also get, like examples in the form of the MCQs as well. So all that kind of questions can be expected in the examination, wherein you will be required to, solve these questions and apply the TDS provision. But what is here important, students, is that whenever you answer any kind of these questions, please quote the provisions very correctly. So make it a point that you quote the provisions correctly. Otherwise, what will happen is, students, that you may not be able to understand, like the examiner may not be able to understand that why you are applying a particular provision. You don't have to write that, okay, this is what the TDS will be, this is what TCS will be. You don't have to be like that. You have to quote the provision correctly in the examination. Clear? Okay. Next one is, 194P. This is deduction of TDS by a bank in case of specified senior citizen. Now, which banks are required to deduct it? All the banking companies which are there, they have to deduct the TDS in respect of the specified senior citizen. Specified senior citizen is the individual who is a resident in India of more than 75 years and is having the pension income. He should have no other income other than the pension and the interest on the bank accounts. Are we clear? Now, what they are saying is that what will be the rate of the TDS where the pensioner exercises the option to shift out of 115 BAC. Then in that particular case, whatever the slab rates are under the normal tax regime, after giving effect to the Chapter 6A deduction and the rebate. If he goes for 115 BAC, then as per the 115 BAC. And once the TDS is deducted under 194P, there is no requirement to file the income tax return. So the pensioner has been given an option that he can, just get the TDS deducted from the bank in which he is receiving the pension, and based on that, he will then not be required to file any return of income. So if you see this question, Mr. Sharma, a resident Indian, age 77 years, get pension 55,000 per month in UP state government. From the UP state government, the same is credited in the SBI Lucknow branch. In addition, he gets the interest on FD on 20 lakhs. Out of the deposit of 20 lakh, rupees 2 lakh represents a 5-year term deposit. Interest on saving bank is 9,500. you are required to compute the total income and the tax liability for the AY 25-26 in a manner more beneficial to him. So you will compare old and the new regime. What would be the amount of tax deductible at source by the SBI? Assuming that the same is a specified bank, is he required to file the return of income if tax is fully deducted? Is he required to file the return of income if the fixed deposit of 20 lakh was with Canara Bank instead of the SBI? So in this case, see, first you have to compute the tax liability. So you will have the pension of 55,000 into 12, less the standard deduction of 75,000 if you go as for 115 BAC. You have interest on the fixed deposit and the interest on the saving bank account. You will not get 80 TTA because you are going under 115 BAC, right? So this is what the tax liability comes to after the cess. Then you will do it without going under 115 BAC normal provision. There you will get the standard deduction of 50 and you will get the 80 TTA also and 80 TTB also, right? So interest on saving deposit is there. And under 80 TTB, you have the interest on the fixed deposit, right? So that is up to 50,000. In case of senior citizen, you have 80 TTB, which is restricted to 50,000 for both interest on the FD and interest on the saving, right? So in this particular case, he will get 50. He has the 5-year term deposit. So means he will also get 80C, isn't it? Because 80C is there if you deposit the amount in term deposit and he has done it during this year itself, right? So this will be restricted to 1.5 lakh and the liability comes to 26,940. So the liability is lesser under the 115 BAC. So it is advisable for him to go under that. Now SBI will deduct the TDS at this particular amount itself and deposit to the government. And if SBI deducts the entire amount, there is no requirement to file the income tax return. Now, if he had the fixed deposit with Canara Bank, then would it be the case that he will not be required to file the return? So if it is not with the same bank where his pension is credited, then he will not qualify as a specified senior citizen. In that case, he has to file the return of income. Are we clear? So this fixed deposit, the interest on which it is earned should be with the same bank. Yes, in that case, the ROI has to be filed. Next one is the 194Q, which is the TDS on the purchase of goods. If your purchase of goods is more than 50 lakh, then on the sum exceeding 50 lakh, you have the TDS at the rate of 0.1%. Now, this is not applicable in a case where the TCS has been collected. And here, who is the buyer? The buyer is one whose turnover is more than 10 crores in the last year. If your turnover is less than 10 crore, then you are not required to deduct the TDS under 194Q. And the TDS will not be deducted on the GST amount. It has to be without the GST amount. Are we clear? Can non-resident be a buyer under 194Q? The answer is no. 194Q will not be applicable on the non-resident. Clear? It is only applicable in the case of the resident. What would be happening if the buyer is incorporated in this year? Then with respect to the 10 crore limit, there will not be any 10 crore limit for the last year because he is incorporated in this year. 194Q will not apply. Are we clear? So if the turnover is less than 10 crore, then the 194Q is not applicable for the last year. So if you are incorporated in the current year, obviously there is no requirement of the turnover in the last year. Are we clear? Any questions, any doubt with respect to 194Q? Fine. Next is 194R, which is TDS in respect of the perquisite or benefit, which is given. This we have already done in PGBP. So when you get the perquisite or benefit, which is taxable under 28(4), the 194R TDS is to be deducted in that particular case. And what is the amount which is there? 20,000. The threshold is 20,000, and in case of individual or HUF is only required to deduct if they have a turnover more than 1 crore or 50 lakh in the last year. Are we clear? So in this case, you have the TDS to be deducted under 194R. Clear? Yes or no, students? Fine. So this we have full-fledgedly done as a part of the PGBP chapter. You will go and look at it at the PGBP chapter to see what are the kind of discussions that we had it over here in respect of the 194R. Now, there are certain points in respect of the 194R which you have to specifically understand. Okay. Now, 194R which is there, is it necessary that the person providing the benefit or perquisite has to deduct it if it provides in kind? The answer is yes. They have to deduct the TDS and then only give the benefit of the perquisite or whatever they are releasing. Are we clear? So, 194R casts an obligation on the person for providing any benefit to deduct the TDS before they release any payment. So, here they have to deduct it and only then they can release the whatever perquisite which is there. Are we clear? Now, if the benefit is given in the form of capital asset, waiver of bank loan, they have to deduct the TDS of the equivalent amount. Are we clear? So whatever the value is, in that particular case, the value of the benefit or perquisite, whichever there, so on that value, they have to deduct the TDS under 194R. Clear? Now, if the loan is waived by the bank, which is also treated as benefit or perquisite, right? In that particular case, will 194R be applicable? So, any amount which is waived by the bank is considered as the perquisite under 28(4). However, the CBDT has clarified that one-time settlement with the borrowers would not be subject to TDS under 194R, although it will be considered as perquisite, but there will not be TDS requirement. What will happen on the sales discount, cash discounts and rebates? So, the sale discount, cash discount or the rebates which are there are considered as the perquisite, but there is no tax which is required to be deducted. Are we clear? Because it will be difficult to apply the 194R in that particular case. So when a person gives the incentives in the form of discount, cash discounts, or if they give a free ticket, so there is a relaxation which is provided from the non-deduction of the tax for the sales discount and rebates. But in case they give a free ticket, they sponsor a trip, they give some free samples, in that case the TDS has to be deducted. Are we clear? So if a free medicine sample is given by a company to a doctor, in that particular case the 194R is required to be deducted by the company as it is a benefit or perquisite to the doctor. Are we clear? Yes or no? Any question? Any doubt? Yes? What about the products which is given to the social media influencer? Right? So in that case, again, this is a perquisite. If they are retaining the product, if they are giving back, it is not. Right? So in that case, again, the TDS will be applicable. In case of reimbursement of out-of-pocket expenses, you get consultancy fee as well as the out-of-pocket expenses for the travel. So if the travel expenditure is met by the company, it is a benefit for the consultant. In that particular case, there will be TDS which will be there. However, if the invoice is in the name of the consultant only and it is just reimbursement that is made, then in that particular case, the service recipient will not be considered to have given any benefit, and in that case, there is no TDS. Yes? Any question? Any doubts? Okay. Now, what you need to understand is that in case of the dealer conferences, again, if they give certain free samples, if they arrange certain travel for the, days beyond the conference, then it can be considered as a perquisite also. So in that case, again, 194R will get applicable. Clear? Next section which is there is 195. Again, this is a very important section. This is in respect of the non-residents, but this you will learn more in the international tax class. You will see that if the payments are being made to a non-resident, there is TDS which is there, which is deducted under 195 at the rates in force. There is no specified rate. It is at the rates in force, which means the rate specified under the Act. or the rate which is given under the DTAA, whichever is beneficial to the assessor. So on that rate, the TDS will be deducted. Clear? So this completes all your section of the TDS. Now, as I said, that in case of certain sections, it has been provided that you can request for the lower deduction certificate to the assessing officer. So where in case you feel that maybe your salaries, interest on securities, dividend or interest or other than security, contract payments, commissions are there, your rent is there, FTS is there, right? In any of these cases, you can make an application to the AO for deduction of tax at lower rate or for non-deduction of tax. Right? Even in case of 194Q. So if the AO is satisfied that, okay, your total income is lesser than the taxable limit. Okay. So in that case, or if your total tax rate is lesser than what is given under these sections, then in that particular case, he may give a certificate to the payer that deduct the tax either at 0% or at a lower rate. So basically what it means is, let's say I'm saying that I'm not a taxable person, but still the banks are deducting the TDS on my interest. Right? Now I will have to unnecessarily go and file the return and all of that. So I will request to AO that, look, my income is less than basic exemption limit. You give me the nil deduction certificate, and this certificate, they will issue it to the payer. That this person is not taxable person because his income is less than basic exemption limit. So do not deduct the TDS under, let's say, 194A at 2%. It will be at 0%. So you can request to AO or at 1% or at 0.5%, whatever the applicable rate will be for me. Right? So any individual who is also, a resident in India, a non-resident in India, whosoever is there can request for the lower deduction certificate. Are we clear? Then, secondly, in terms of the TDS, now this TDS which is there is considered as your income, meaning let's say if the 100 rupees is the payment, out of which 10 is the TDS deducted, 90 is being paid to me. Now I will not consider 90 as my income. I will consider 90 plus TDS of 10 as my income, so that the gross amount is considered as income. And then the credit of the TDS will be provided to me from the tax liability which is there. Right? So I will get the credit of the TDS of 10. Correct? So the gross amount is considered as my TDS. The gross amount is considered as my income. And the person who is deducting the TDS has to deposit the TDS in time to the government, right? As per the due dates which are there. If he doesn't do that, he will be considered as assessee in default, which means that there will be interest for the late payment of TDS or non-payment of non-deduction of the TDS. So 1% per month from the date on which the TDS was deductible till the date TDS is deducted, and 1.5% if he makes the late payment. Correct? There will be penalty also, and plus the expenditure will also be disallowed. In case the payment is made to resident, 30% of disallowance. In case it's non-resident, then 100% disallowance. However, he will not be treated as assessee in default if the payee files the return, discloses this income in the return of income, and pays the tax on that particular income. Are we clear? So in this particular case, understand that the person will therefore not be treated as assessee in default. Are we clear? Any questions, any doubts so far? And in the TDS is deducted, they have to file the TDS return also, the payer, and has to issue the Form 16 or the certificate of TDS as well. Clear? So this is all about your TDS provision. Next is the TCS provision which is there. Now again, TCS which is there is in respect of, okay, one more thing with respect to TDS. As I said, there is higher TDS if you do not have PAN. You have higher TDS if you have not filed the income tax returns also. 195, yes, is an exclusive section. Is there any other section for non-resident with respect to TDS? Yes, there are for the non-resident sports person also, 194E, which is exclusively for non-resident. Again, you will learn that in the international tax class. 194 LA Mukesh is for the compulsory acquisition of the immovable property. So 194 LA, which is there, is for the compulsory acquisition of the immovable property, in which case if the government is compulsorily acquiring the land, which is not the agricultural land, in that case the TDS under 194 LA is credited. What on the compensation or enhanced compensation? Again, we have done that in the capital gain class, which is 10% on more than 2.5 lakh. Are we clear? Yes? Okay. Now coming to the TCS. TCS is the tax collected at the source. So on the collection of the amount, they will also collect the TCS under 206C. Now, what is 206C saying and on which transaction this is applicable? Let us understand this. So, this is on the sale of certain goods, alcoholic liquor, timber, tendu leaves, scrap, minerals which are there, right? On these, the TCS are there. It is not there on the goods which are utilized for the purpose of manufacturing, processing or producing for the purpose of generation of the power and not for trading purpose. It is also there on lease or license of parking lot, toll plaza, mine or quarry. Then most important one is this: sale of motor vehicle or notified goods of value exceeding 10 lakh. So in case the goods are notified goods, which are basically considered as luxury watches, luxury goods which are there, paintings which are there, on these, and as well as the sale of motor vehicle, on these there is a TCS at the rate of 1%. Right? So there will be TCS at the rate of 1% on the sale of the motor vehicle, but it is not applicable on sale of motor vehicle by the manufacturer to the dealers or the distributor. Are we clear? And this is applicable where the sale of the motor vehicle is more than 10 lakh rupees. Are we clear? So this is on the sale of the motor vehicle more than 10 lakh rupees. Next important provision on TCS is the overseas remittance or the overseas tour package. So any bank or the seller of the overseas tour package is required to collect the TCS amount, which is if it is for the purposes of the education or medical treatment, then in that particular case, there is no TCS up to 7 lakh and there is TCS of 5% of the amount in excess of 7 lakh. In case of the remittance out of the loan obtained from any financial institution for the purpose of pursuing any education, it is 0.5% of the amount in excess of 7 lakh. In case of overseas tour program package, it is 5% up to 7 lakh and 20% above 7 lakh. And any other remittances beyond this, there is 20% on the amounts in excess of rupees 7 lakh and below that there is no TCS. So this is what you will have to remember with respect to the overseas tour package and the remittances which are made for the purposes of the education or for the purposes of the medical treatment or any other purpose under the liberalized remittance scheme. So the liberalized remittance scheme is the scheme which is operating under the FEMA, in which you can send the amount abroad. Any resident person can send the amount abroad. Are we clear? There is no TCS on the expenditure through the international credit card. There is no expenditure on the, there is no TCS on the expenditure made through the international credit card while you are using it outside India. Are we clear? Next is, in case of this 7 lakh which is there, this is a combined threshold for all the purposes. So let's say I'm putting 7 lakh for medical, 5 lakh for education. This 7 lakh is the combined threshold. So even if you are doing 777 lakh for each of this, the entire remittance will be taxable under the TCS. Are we clear? So this is not the qua particular transaction, this is qua remitter. This is for all the bankers together. So this is the 7 lakh which is there for the TCS is for all the transactions which are there. So for LRS, the threshold of 7 lakh applies with respect to medical, education, any other purpose that you are sending. But with respect to the overseas tour package, there is a separate threshold of 7 lakh. So for overseas tour package, that is a separate threshold. For the LRS, liberalized remittance scheme, there is a separate. But under LRS, even if you send for medical, education or whatever, the entire 7 lakh apply. Are we clear? So, let's say I'm putting 3 lakh for overseas tour package and let's say 8 lakh for LRS. So, on the overseas tour package, there will not be any TCS. On the LRS, there will be TCS. Now, whether it is for medical, whatever purpose it will be required, the TCS will be required to be collected on that by the banker. Are we clear? Any questions, any doubt? Yes or no? Now, whether if you purchase the standalone hotel booking or whether you make a flight booking, whether it is counted as overseas tour package, answer is no. Overseas tour package means what? A combined package where you have the travel, accommodation or any other expenditure of the itinerary. Only purchasing the hotel ticket or hotel booking or the airline booking, that will not be counted under the overseas tour package. That will not be counted as overseas tour package. Okay. Yes, 7 lakh limit is separate for the education or medical separate. No, as I said, it's a combined limit which is there. Okay. Now, sale of goods value exceeding 50 lakh, on that also you have TCS at the rate of 0.1%. Now, who is the seller over here? Seller is the one whose turnover is more than 10 crores in the last year. So, on the purchase of goods, you have 194Q. On the sale of the goods, you have TCS applicable under 206C1H. So, how you have to ensure that, both are done? So, what they say is that the seller has to collect, if the transaction is both within the purview of 194Q and 206, then the purchaser is required to deduct the TDS. So if the purchaser has deducted the TDS, the buyer has deducted the TDS, the seller is not required to collect the TCS. However, if the buyer has not deducted the TDS, then the seller will collect the TCS. Are we clear? So first primary responsibility will be of the buyer to deduct the TDS under 194Q. Here also you have higher rate of TCS if the PAN is not furnished, which is 5%. Under TDS you have 20%. Here, in case you are non-filer of income tax return, also you have a higher rate of 5% being applicable. Clear? So this completes your TDS and TCS both. Any questions, any doubt that you have? Yes, seller on receipt, buyer on the credit or payment. Yes, that's right. Any questions, any doubt? Okay.
Ma'am,
yes.
Ma'am, I had put a mail as discussed with you addressing Aparna ma'am directly regarding the Saransh and the doubt that I raised in the last session. So as yet, no reply I have received. So can you, it's a humble request, can you just check up with her or, just find out what is the current position? I mean, to look into the mail and reply to it.
Sure. I will talk to her. I'll tell her to, give you the reward.
Yes, please. Because there is something like study guidelines that is also issued, if I'm not mistaken. Study guidelines that are issued for each and every attempt. So I think there is a professor who said that details would be provided in that related to this. So I am still not clear on these terms. So it's better that I get to hear from her. So
Sure.
you please follow up with her, ma'am.
Sure, I will tell her regarding your request, and I'll speak to
Yes,
her.
yes.
So in the next class, yeah, I will not have next class now. So maybe,
Yes, yes.
tell her.
Acha. So when would be your next? It would be
It will be directly in July for the statutory update.
Acha, acha. I so knew it. I knew it. The next upcoming sessions, I thought you must be not be taking it mostly. So that's the
Yeah,
reason I raised it right away. So
sure,
please, ma'am.
sure, I will do that.
Thank you.
Siddharth, in the next class, see, Siddharth, I have tried to do as many TDS, TCS examples from module, although I, wanted to revise it also for you. So next class, I'm not there for TDS, TCS, but I request, you to do some questions from the model test papers. And in case you have any query, we'll be happy to discuss in the July when we will have the statutory update session, because I am not having any sessions until the 1st of July. So directly, I think we will have session on 3rd of July, in fact, not even on 1st, but 3rd of July on the statutory update. At that point, if you have any questions, certainly we'll be able to discuss. And if the time permits, I will absolutely take it up. Thank you so much.
Thank you so much, ma'am.
Okay, thank you so much. We can close the session.
Thank you, ma'am.
Thank you.